Hi everyone, welcome back to the channel. I decided today that I was going to make an update. It's been 4 years. That's crazy. The last video I made was 4 years ago, and I was showcasing my TFSA, which was about 6 to 7,000 Canadian. Figured I would provide an update, as the goal of this channel was to showcase my evolution of as an investor, how I, think, how I break down companies, how I evaluate companies, and just my overall kind of growth as a 20-some-year-old interested in finance. And yeah, today I sit in front of you with $155,000, give or take, of investments. Of the 155, some of this, I won't lie, some of this is actually just cash. So today's video is going to be very quick and easy, just to start off, get back into the flow of things, and eventually, if I'm still interested in making more videos in a video format, then we can start, if there's an interest, diving deeper into how macroeconomics connect with my strategies, how I go about investing, and then we can even dissect some companies. So let's get started. Starting off, you'll see here the first three accounts are different checking accounts. I have a small emergency fund here, which is going to keep growing. I have some cash here as well for the tax man. And we have some additional cash in this account for basically putting into an investment account or purchasing out some options and shares of the company I currently work for. If we look at the TFSA and FHSA here, these are both self-directed. I will dive further into the TFSA just to give you a comparison of what has happened in 4 years compared to the last video on this channel. And then at the very bottom, we have a crypto account with a little bit of crypto. And then we have a group RSP, which is currently managed by Wealthsimple. All right, so TFSA. Where are we at with the TFSA? The TFSA has grown. I have not added much money to this account, funny enough. So a good chunk of this is actually pure profits, from you can see. So if we scroll down, you'll notice there's very few holdings that I had back 4 years ago that are still present. I now have some Amazon. ASML is a very new position for me. I've added ASML about a month ago, and I've doubled down very recently when the market kind of lost $1 trillion worth of value due to the AI DeepSeek kind of event. And yeah, I decided I was going to purchase more of it, double down on the position. I very much like ASML as a business, and it's basically a monopoly. My TFSA, the strategy for the TFSA is building out a portfolio which is composed of very high quality companies providing very good cash flows or reinvesting their cash flows in a very efficient manner. And I try to go for monopolies, duopolies, something that has a very large moat. That way it kind of protects itself. Now, moving on from ASML, we have Bank of Nova Scotia, which is now my only Canadian bank that I hold. I used to have TD and there was another one, but I have since got rid of these other bank stocks with some gains, reinvested the gains, and I pretty much did the same thing for the majority of the companies that I used to have. I kind of all sold all of them. I'd say 95% of them in the green. A good chunk of those were very much into the green and decided to put the money elsewhere in better opportunities. So basically, Bank of Nova Scotia is now the only Canadian bank that I own. I very much like the new management. I think there's good growth ahead for this company, and so that's why I'm still holding on to it at the moment. We then have two kind of boring stocks, if you will. These are the most boring stocks in my holdings at the moment for the TFSA. We have two railways. We have CPCN. These are kind of a way for me to diversify a little from the very tech and finance heavy portfolio. I have a lot of financials in this, and I have a lot of technology, as you will see. We have some Google, MasterCard, Microsoft. These are all the CDRs. I would love the USD to be cheaper against the Canadian dollar, but right now, with the current reality, I'm trying to preserve the value of my Canadian dollars, so I'm going with the CDRs. In terms of MasterCard, this is a very new position for the CDR. I had the original US variant of MasterCard, so the actual shares of MasterCard, and I sold them in the green last week to purchase more ASML instead of converting CAD to USD. I've been adding to my Google and Microsoft positions for a while, and to kind of replace the to replace the Mastercard that I had, I've used some of the liquid cash I had in the account while I was waiting to find something worth investing into, and I've repurchased my Mastercard position. POW is nothing new in this portfolio, I don't think. I think I had some shares of Power Corp of Canada 4 years ago. I've since added to this position. I like what they're doing at the moment. I like how the company is growing and acquiring. So I'm keeping this for now. This is the TFC that I'm currently using, PSA. This is providing me with regular monthly um, dividends, if you will. And until I find something that I really like, then I'm leaving it in this. I find that the market right now is very expensive. Everything is extremely, I wouldn't say everything's overvalued, but a lot of things are overvalued in my opinion, compared to the forecast of earnings. And so that's why I'm kind of cash heavy for the rest of this account in comparison. And finally, we have two more stocks. So we have Visa, which I used to have more shares, sold a good chunk of it last week to purchase more ASML. We still have one share, which I don't know if I'm going to sell or keep for now. I'm probably going to keep it for now just because Visa is kind of also a boring pick. It's going to keep growing. They're doing good work. They're very efficient with their cash. So for now, no reason to get out of it. X is a newer position that I've added within the past year. So nobody would have known about this. I very much like the TMX group. They're the ones who also have TSX Venture and the TSX exchange. They have a bunch of other services that they provide. This to me is the equivalent or as close as I can find of Moody's and S&P Global, for example. And so same for FICO. It's a business model that I've discovered not long ago. Of course, it had existed for a long time, but I never really thought about that type of business. And upon finding it while doing some studying for the CSC, um, I kind of got obsessed over it. I looked into it. I really liked what they're doing. I like that there's multiple avenues of revenue. Uh, it's to me, this is a good quality business. It can be very um, it, it isn't it's a company that has a lot of possibilities of like the market price fluctuating very quickly, but then again they make a lot of money off of transactions. So to me this is a riskier investment, but I'm not too worried just because the as long as people are transacting, buying and selling shares, and companies need data, uh, TMX Group is going to be providing revenue or obtaining revenue, I should say. So that's the setup for the TFSA. If we dive into the FHSA really quickly, this is going to be extremely boring because I haven't really found a strategy that I like yet. So for this, it's slightly half kind of tech, and then about half is basically the railways. So very boring setup at the moment, and I just wanted a little bit of skin in the game instead of just putting everything in an ETF. This ETF right now that you're seeing, this is very recent cash I've added to the account while I'm preparing myself to build out the account with a strategy. So that's very boring at the moment, but you have $13,000 in there. So that's pretty much it. That's where we're at the moment. 154, 155K. And yeah, I'd say next big goal would be hitting 200K, which I think is doable. And the midway point would be 175. So I'm looking forward to that, and I think we can achieve 200K before end of 2025, potentially faster. Depends on a few things that I decide to maybe do or not do throughout the year. But I'll keep you guys posted. I'll see you guys in the next video, and until then, have fun. Take care.